Hello, everybody. So welcome to my second session. Before we start, just a short question to the boss, aka Anne. Do you want to say something or shall I just start?
Hi, Marcus. It's me. Where is my microphone? So yeah, you can just go ahead start it because I have a visit from an uncle, my husband's uncle here. So maybe I will be on and off, but right now I'm here.
Sounds good.
All right, so you can go ahead. Hi everyone. So enjoy the session with Marcus. He's very good, and he's recording it. And if I miss some of the recordings, I will just go ahead with we'll watch again after that. Thank you, Marcus. Go ahead.
Thank you. So what are we going to talk about in the session today? We already announced it the days before. I will make a short common section and a recap of the things we talked about last time, let's say where the comments have been addressed. We will talk about the so can you please stop drawing? I know it's cool to have all these functions of Zoom, but it would be great if you don't try them out. Just sit back, relax, and listen. I think that would make things easier for all of us. So I will also be talking about the one-on-one expectations from the people we had, some considerations, and something we learned from the sessions we had before. I want to make a short introduction, really a brief one, to supply and demand. I want to talk about psychology, the trading plan. I also want to introduce you a little bit more in the market sessions. And the last point will be a little bit of reading the charts and maybe scalping. And one thing you might have already realized is Kyle usually, provides a little bit more of the hardcore trading stuff, where the people who already know what to do might be, of course, and fully understandable, more interested. And I usually come up with more or less fundamentals, but that's what my plan from the beginning was. Although we know what sessions are, and what a trading plan is. Really, guys, can you stop? I'm not sure if I can turn this off actually, because I find it annoying. All right, turned off now. And yeah, I think there needs to be a good balance because you need both. And sometimes, you think you understood something, and in fact, and it was the same with me. I always thought I understood it when I just watched other people doing it, but sometimes the real insights or the fundamentals are just still missing. And I love to compare it with sports. So you shouldn't go for the burpees, which is the more advanced kind of push-up, before you actually can do your first push-up, because otherwise this might lead to injuries, and it prevent you from further training. And it's the same with trading. It's not only in training, but also in trading. If you haven't managed the fundamentals, the easy things, yeah, you might get hurt. And that's what I try to bring in here, additional to all the other things we anyways do. Because at one time you can go through all the videos and watch them again and have a complete overview of all the topics. At the moment, it probably doesn't make too much sense because we mix the topics a little bit. However, we need to start somewhere. And something I want to address here is a kind of common part is the questions from the last session. I'm not sure if you were aware about that. They have been answered in the training space within the according posts. If you haven't recognized so, then just go back, because this is the same thing like we will, or I will do for this session. I will download the chat afterwards, have a look what questions came up. Some might be answered anyways and some not. And those which have been left unanswered, I will address afterwards in the training posts and in the community topics. Still, we have this, community topics which we collect, and I ask you to continue to raise the questions in the coding posts. Until now, I know not a lot of them have been answered, if any, but we have a look at them and we will take topics from there. It's just that we had other things to do at the moment, but we will take for sure topics from there and answer them. So please continue there and don't be disappointed if the question has not been answered yet. Then I also wanted one more time address this topic because, it's not, this video will not only be presented to the community, but will also be public, available on YouTube. That's why I also one time more wanted to address Anne's service and that I'm a big fan of it and that there's nothing, I'm part of several groups, I was part of several groups, and I just can say nothing like that is available anywhere else. Of course, now that I'm part of the group as well, I have to say that. You might think so, but that's not the case. Because when you come here and when you see the community, you will also see that there is so much given and so less taken. And in fact, I think from all the groups and communities I was in, this is a community with heart and there is no haters here. Of course, we are still in a trading kind of environment, and sometimes it's a little bit, let's say, more rude than in other groups. I think that's the nature of the business. But I never saw anyone being really bad or something like this. So what I saw until now, I really liked, and I hope we can continue like that. And then there's a few personal questions which arrive to me through the personal chats, and that's quite a lot. And I'm actually always answering all those questions. But one thing I always also want to make sure is that we are here in this community, and I think that's the goal of each and every one of you, to become professional traders, and not so much about making friends, because this is a business. And due to the amount of questions we get, and I think Kyle will be in the same situation, we really want to take the time and focus on the trading questions. And also I want to address with this one, if I say you clearly that I don't want to answer personal questions, it's not meant to hurt you. I'm not here to hurt anyone or someone or whatever. I just want to make clear that we should also actually more or less concentrate on the trading business, because we have so many people interested in topics and we don't have, so much time to dig deeper for some other things. And I don't really mean it bad if I say that. It should be also to your own benefit. For the one-on-one lessons, we had some expectations in the past, and I just wanted to address this too, in case you're interested in, or also in case people from outside our community are interested in. One thing is, sure, you should not expect that you become a professional trader by booking one lesson with us, with Kyle or myself or Anne. That might not help unless you really advanced and there's only the last thing missing. But the experience at the moment is quite different. What we try to do is that we find the topics you struggle with. We really try to find out like a pinpoint where the problems are step by step, in order just to improve your trading step by step. And sometimes we have to start with the basics, like market structure, like liquidity, imbalances, shocks, and so on. Because if you haven't understood that, it doesn't make sense to go forward and actually trade. For Anne's order blocks alerts, it's somehow different. If you only want to concentrate on those, that topic is actually much easier, and that's the beautiful thing about that. But if you want to go deeper in SMC, then you have to understand the topics. And you also have to understand that the commitment in equals the commitment out. So you become what you want to do and what you do. And also, one thing is important: when we had a one-on-one session, it does not automatically become a mentorship. Of course, we will support you further on, but just that you don't come in for a one-on-one session with these expectations. This is just something we want to clarify. And also, some considerations you might, you should actually have is that for you, of course, you book 1 hour, you pay 1 hour, but for us, we spend much more time pre and post processing, also when we do homework and other things. So it's actually more than 1 hour for us on our side. And what we also want to make sure and to clarify is that we don't do this mainly for the money. So don't get us wrong. Of course, we do it for the money, but not mainly for the money. But it helps us, of course, also to protect ourselves from, you know, everybody wanting to book us actually without commitment. And if you pay something, then you have a first commitment, and it's a different commitment as if you do it for free. And a few lessons learned is, which I want to bring up, is if you have not watched Anne's, Kyle's, or my teaching videos at least, then you should not book a session. That's a waste of money for you. It's a waste of your money, just to make it clear, because we have to start from the very beginning, which we don't have to if you spend the time yourself, and it's much cheaper if you just do it before for yourself. And then there's a lot of fellows think that they have understood topics like market structure, chocks, flips, and I can understand that. I want to repeat it. I was in the same position. For a long time, I thought I understood everything because I watched so many videos, had so many course material, until I came to one mentor who actually wanted to do me homework. And I did the homework, and as I did it, I found out I haven't understood it correctly. Of course, when someone else does it, I can follow, I can watch, I can see everything makes completely sense. But when I have my own charts in front and I have to do it myself for different charts, I find out that I completely struggle. And this is what I do with my students. So I will give you homework if you book a one-on-one session with me, and you will show me with this homework if you really understood what the smart money concept topics are and how they work, and we will identify all the weak spots and improve exactly from there. And as I said, I was in the same position, but it's a huge difference in watching and doing. And doing really helps a lot to improve. And then there's sometimes the question who to consider for a one-to-one session. And I'm really happy to provide you some ideas. It's not more than that. So for Anne's alerts, if you master them, but you want to go now to the 1 minute and seconds, then I would really propose that you book our trading Superman, Kyle, because he masters obviously all those things. If you want to master anyways the seconds time frame, then also Kyle is your man to go, because I don't even have a seconds time frame. If you want to master Anne's alerts, then book Anne, Kyle, or me, whoever you might prefer. And if there is something you saw in my personal teachings you want to improve in, then book me. And also probably consider time zones and languages if you want, because time zones can lead sometimes to problems. If we have the complete opposite ones, it might be somehow difficult to find a slot together. But even if, and you still want to come to me, Anne or Kyle, we will find a solution. I'm sure it would just not be a same-day solution maybe. And for the homework point of view, so if you book a session with me, you have to prepare for homework. So it means additional work, but it will be for your own benefit. If you don't want to do homework, then please don't ask for a session with me. If you don't understand what I teach, and that is very important, then it's my fault and it's not your fault. and this will be clear to us both. And I am, of course, happy when I can see that you make steps in the right direction. And until now, everyone actually did improve when we had our sessions. And of course, it means additional efforts for both of us. But as I said before, it identifies your weak spots and also your commitment. So now let's start with the topics you actually might be interested in, maybe. As I said, it's fundamental topics. It's not the deep lessons where you understand everything now, but you have to get an idea, because in the last session we just talked about order blocks, and of course most of you already heard about supply and demand. But for me, supply and demand goes a little bit deeper into the details than just order blocks. And in this lesson, or in this session, you will learn why this is the case. So what can we understand for a supply zone and demand zone? I think it's good. You can see here demand creation process, kind of. And something I have in mind is that demand is created when supply is broken. So you have here an area of demand and you have an area of supply, which we at the moment know as there might be an order block, there is a swing high, there's a swing low, there's internal structure. And if this swing high is broken, then we create a new supply zone. So if this swing high is broken, we create a new supply zone in this area. If this supply is broken, we create a new demand zone in this area. So from my experience, I will keep messing this up over and over again. I don't know why. I always change supply and demand, but from what I saw from other videos, I'm not the only one who does that. So please be patient with me. Same here. Supply is created when demand is broken. So you had here a supply zone, and you had your last area of demand, which was this one, because it broke this last supply area. And then this supply zone was created by breaking this demand zone. So if you can keep this in mind, that supply is created when demand is broken. And again, demand is created when supply is broken. Now we have, a little bit like a step forward. So when I look at my charts, I ask myself the question, who is in control? As you have different zones, you want to know if demand is in control or supply is in control. Here we can see demand is in control. We had a supply area. The supply area was taken out. And as it was taken out, it created a new demand area. And as it continued to do that, we can see that demand was holding. So demand was in control. All the way up in this uptrend, demand was in control. Why I'm repeating this over and over again? Because if you look at the charts like that, in terms of who is in control, you understand that you can trade between a demand and a supply zone, but you want to trade the strong side, which is, if the demand is in control, you want to trade the demands. In this case, probably the internal structure, internal demands. If this is a 4-hour, the black one is the 4-hour structure, and the yellow one is the 15M internal structure, and you know that the 4-hour demand holds, you could wait for your 15M internal demand positions which you want to trade. And this works for all the time frames, of course. It's a kind of different approach than we had before, but this one for me is a little bit more accurate. And in this case, you can see we continue up. Demand was holding until we reached that point when supply come into control. Why suddenly supply was in control? Because it started to break the last zone of demand, which was this one. This was our last 4-hour demand zone, which was broken. And from that point on, we knew supply might be now in control. And when we know supply is in control, we now monitor the supply zones in the other direction, because we can see now all the demand zones are taken out because supply is holding. And we want to trade the areas between the supply and the demand zone, actually, in the internal structure in this case. And this actually is exactly the same when it comes to our jogs. We have the same structure as we had before, just that we now say instead of strong lows, strong highs, weak lows, strong highs, and so on, like this one here, we can now also see, additional to what we already know, we can consider now demand and supply areas. And the jog, as we already said before, is a shift between demand and control and supply and control. But again, it's in fact a change of character, it's a reversal, it's a kind of shift in structure. However you want to call it, it always stays the same. So, and for this example, I took, I think, yeah, it was a GBP USD example in 4 hour. And what we learned so far was, you know, we look for market structures, we look for mitigations and so on. And I took this example here. You have what we know so far is we had here a break of structure. This is what we can read, just how we can read the charts. We have a kind of mitigation here. We had the downtrend continuation. And then if we consider supply and demand, we want to probably read the charts a little bit differently, a little bit in more detail, because so far you would probably say we had a break of structure here, and then who created this break of structure? Yeah, it probably was this zone here where we had the last, you know, opposite candle, or was it this one? We could actually map both, but that's exactly what I want to come in this session, or what I want to point your eyes on is read the candles differently. Maybe just not to confuse you, let's have a look first again on the Pew charts, because what can you see here? We had a break of structure, and this down move, actually this high broke the structure. Now, of course, you're interested in where would I find a potential trade in all of this up here? And then if you have a look where are the imbalances? Is there any inefficiency? You go candle by candle, have a look. Now you can see, well, here you can start, here you can see that the imbalance started. And before, you haven't had any imbalance. Everything is actually quite efficient. What is efficient? If the wicks overlap. So if you have all the wicks overlapping, then everything is actually efficient. So if you have a look down here, you can see there is a big imbalance. And who started then this break of structure? Which candle was it? And in this case, you would actually say we had a down move, an up move, and you can see this down move created all the imbalance here. So you might be interested actually in this down move, because this was where the inefficiency and the imbalance started. Everything else above was efficient, and you probably might not be as interested in this as in this strong move. Now we have it marked up a little bit, and you can see there was a small imbalance here as well. I marked it up. So this would be a zone you still might be interested in, and you would have two zones in this fact, but it was this one who created the huge imbalance, and which still has some inefficiencies as well. And now you can see price came back up exactly to the zone we have highlighted. And you can also see this wick actually balanced with this one down here. That's why I made this horizontal line, which might make this upper zone not as valid as it was before. So you consider this one first. You still can have two zones. And now if we see this one, of course, we want to have some kind of further, yeah, well, I say further confirmations, although there is no confirmations in trading. However, you want to have a look what was happening in here, because this zone is a zone of interest for us. And what happened in this new formed supply zone? You remember the demand was broken, supply is created. Of course, this might also be a supply zone, but however, this one was the supply zone who broke this structure. So let's have a look what happened in this supply zone. So, and if we have a look now, we can see this was the breaker structure. We are now on a 15 minutes time frame. We still have this imbalance marked up. And what happened in this zone? And what you can spot now, again, you start from the top to the bottom. And what you can see here, we have here this wicks overlap, and all of a sudden you have a zone within this zone which has imbalance. You know, the wicks don't meet each other, and then the price continues to go down. So we might be interested in this inefficiency. So we mark up this inefficiency. In this case, it's pure hindsight, I know, but for teaching, that makes it all easier. And you have to go back and just consider now you are in this situation. You know this move started from here, it broke structure. We want to find out what happened in this move. Is there anything which we might be interested in? Is there any inefficiency in this zone which price might target to? If everything is efficient here, price might probably doesn't want to come back here, but there is no reason. So if there is something, we will have a look and we mark it up like we did here because we found an inefficiency here. And we can then see what price did. It just came back to close this inefficiency, not more, not less, and it dropped further from there. All it wanted to do was coming back to this zone, and you could not see it from here because you can see it just wicked in and then continued to go down. But you could have recognized it if you see this is your zone of interest, and then you evaluate this zone for further hints. Let's say it that way. And again, it's just 4 hours, 15 minutes. You can see the wicks don't meet each other. This zone was not so far mitigated, so there might be an interest of the price to come back there, and that's what it did. And that's just a kind of different kind of reading the price action and the candles on the chart. So for supply and demand, I know that's still very fundamental, but for supply and demand, you ask yourself, who is in control on what time frame? And then if the 4 hour demand is in control, you consider bullish trades on the 15M. And if the 4 hour supply is in control, you consider bearish trades on 15M. And the same is for 15M and 1 minute. It's exactly the same thing. You can break it down to any time frame pairs you want to actually. And of course, I know that's only kind of the surface. There's much more about supply and demand, more about how to refine the zones, to read candlesticks, and also kind of supply and demand flips. But again, this is just the beginning. We want to introduce you. We want you to see things differently and to see that what we show you is not things we just invent, but they work, not always, of course, but there's a reason for price doing what price does, let's say it that way. And you can find it out by reading the charts by recognizing things which you have probably not recognized before. And now I want to talk about psychology. And I know for the most of the traders I came across in the past, this was the most boring thing to talk about. But those traders who came or became professional more and more and who managed trading, they understood that this topic is of value. And of course, you probably already have experienced and had troubles with it as well. And that's why it's important to talk about. Because what I very often see is, new traders being depressed and frustrated because what you can see in all the chats and communities and groups you're in, that everybody's winning, but you don't. And I was annoyed by this fact as well. And I'm still annoyed by such groups. And usually I leave such groups quite early because you get distracted by all these winning posts, by everybody. You have 200 people in this group, and every day you see a lot of winning posts. But what you don't recognize is it's not always the same people, first of all, who post the trades over and over again, because if there's 200 people, everybody has a winner from time to time, to say it that way, and they post it, and most of the people don't post their losing trades, and that's very unfortunate. In this group, I already saw that there's a few people who post their losing trades to analyze and ask what went wrong, and that's exactly what we should do, because I don't post my winning trades. Sometimes I post, analyses which are marked up before they happen, and everybody is able to see if it works out or if it doesn't work out. And very often it doesn't work out, because that's trading. And you should not be distracted by the fact that most people only post the winning trades, because some of them might have entered, I don't know, 3 to 10 times only to post one winning trade. And it's good for them that they won. It's good that they have the success, but don't get distracted and don't get depressed or frustrated by that. And if you have mentors or teachers or coaches, whatever, who only show you, winning trades or hindsight markups, I would actually ask you just to move on, because that's not, we all are the best hindsight traders in the world. I can mark up any chart you want and tell you what happened, but that doesn't help. You need to do what you need to do. So you have to concentrate on your very own journey, and don't let yourself distract or frustrate by all these other things. It's your journey. You have to concentrate on your own journey. And then we have the fear of trading. And I was in this situation as well, especially in the beginning. And there's a few reasons why you might be in this situation, that you really have fear of trading, like panic or lack of confidence. It's either because you haven't found your strategy and you're confused, or you're new. You have not backtested your strategy, which means you're probably lazy. I don't mean it bad. I just try to be honest. That's facts, actually. You are trading at too high risk because you're greedy. And as I said, I was in the same position, and all of the 3 points have been valid for myself. You cannot afford to lose the money you trade. That's another point. It usually comes with the greed, because we expect to have all big winnings by all the winners we see in the groups, but just we don't win. And this is this point you should really acknowledge, because you should never trade with the money you cannot afford to lose. And if you can afford to lose it, you might not have hard feelings. And you have to be very honest to yourself when it comes to all these points. And if you cannot find yourself in any of those points, you will not have fear of trading. Believe me, for me, that's a complete fact. And then we have a fear of missing a trade, FOMO, fear of missing out. There's different kinds of FOMOs, like, you marked up the wrong order block and the price went without you, so you jumped in and the price came back because you have been inducement whatsoever. And then there's other people who fear of missing a trade because, for example, all the alerts which Anna and her husband provide, and they cannot think about anything else but the alerts, and they cannot be in front of the charts, and which provides them real hard feelings. And all you have to actually know is you should not hop on any train which is coming by, because that will kill you. You have, believe me when I say, one pair is enough to trade. Once you master SMC, there's not more you need. And of course, if you want to trade Anna's alerts with several pairs, which is the whole concept behind all of this, and it works, you can do this as well. But you have to understand that you don't have to trade all of the pairs. Make yourself a set of pairs you are interested in, and if an alert appears for this one, because you have low spreads for them or whatever, it's the right time zones for you, concentrate only on them. And I would actually say reduce them until you really know what you do. There will be opportunities every day, and there are opportunities every day. You don't have to think you will miss any opportunity. I think it's the opposite. You will just have an additional loser, probably because if you have fear of missing a trade, you haven't spent probably enough time to analyze what you want to do. You probably have no trading plan, because this wouldn't fit to a trading plan, and you are not in a position to be a profitable trader anyways at the moment. So this is something you just have to recognize. And in order to gain confidence, there's also a few topics you should actually consider. Like spend some time on the charts and backtest. That's the most important one, actually, from my point of view. You have to spend the time on the charts, and if you do one-on-one, you will be forced to do that anyways as homework, and you will see a real improvement, because the real improvement, once you have understood what the single SMC topics are, comes with backtesting. Or you trade a demo account. And I did this also in the beginning, but I was bored quite soon by trading a demo account. And we have to be honest, it's not the same as trading a live account. Some people can manage to trade a demo account and then go to live. That's fantastic if you can do it. But if you are like me and you are just bored, and I mean, trading should be boring, but in this case, if you're just bored and you still don't make any steps further, you probably start with a 100 USD account or a micro account and trade live. But practice, your risk management with this 100 USD account. And if you can flip this account or grow this account with 100 USD, that's exactly when you can make the steps forward. But if you keep losing, the money with this 100 USD account, or even blow it up, well, then that's not the right time to go to make the next step. Because trading also means that you will lose very often, and you have to accept that fact. It doesn't mean that you always win, and there is nobody out there that always wins. Even ICT says very often that he, of course, doesn't win all his trades. He just spends more time, doesn't trade everything, and is very picky when it comes to his trades. But in the end, when your winners cover your losses, everything is good, because that's our main goal. It's our business. We have to be aware about the risk we take. And over time, you will improve step by step. And if you consider the following, that's what I did, in fact, to improve. If you lose 1 USD per trade in your 100 USD account, would you create any feelings, or would you be afraid of losing? No, you would probably be annoyed at some point because you still haven't understood it, but it would not make you bankrupt, or I don't know, provide any bad feelings. It's completely okay. And something I want to point out again is that losing is very normal in trading, but fear is not. And if you have fear in trading, you have to adapt right now. And I think by reading those few lines I provided to you, even if they might be boring to a lot of people, this will improve. Over time, you will find out by yourself that everything I just mentioned is a fact, and it's a no-brainer. But if you are not in this position at the moment because you have feelings when you trade, you might consider some of the points I just provided to you. And also something I want to point out is that we have to change our mindset from gambling to business. I started in a gambling style because I watched a lot of videos when it comes to Forex trading where people say, you just have, it's just like in a casino, you have to only have 2 directions. It's buy or sell. And you just, can apply like things like martingale or some other things, but you find out that you blow one account after the other. And it might make sense at one point that you understand, if you want to be a pro trader at some point in time, you have to tackle everything when it comes to trading like your business. And for a business, we have to learn and invest first to perform best. And I know also I I was tired to hear people saying, if you want to learn it, you have to invest, because I also have invested so much money to make steps forward. I think all of us have, and we are really tired of hearing that you have to invest. The problem is, of course, if you invest with the wrong people, then you have wasted your money. Unfortunately, that's a lesson you had to learn the hard way. And I think we all gone through this one. But you have, unfortunately, to invest time, you have to invest money. Not much from my point of view. If you have the right mentors, all this is in a, let's say, keeps its balance. That's really okay. But I think you have to be really talented if you can make it yourself, to be honest. By not investing any money and just trading on your mobile phone, MT4, because you don't have anything else. I saw people doing this, and I know people who do this, and I have the biggest respect. I know I wouldn't be able to do so. And for everybody else who is not as talented as they are, like me, we have to spend some money, we have to spend some time, we have to get the right skills combined with the right tools. And the question is, are you prepared for this business? Do you have the correct broker? You know, because I came across also on one-on-ones where people might not have the correct broker, but that's your main working tool. You have to select a new one if this is not the case. And if some of my one-on-one students listen now, I don't mean to make anything bad what I've learned from you. I just want to take the things you struggle with in order to improve the situation for everybody else. So I hope you don't take it, you don't take anything bad if I come up with those things here. And I hope you don't think I talk about you personally. It might not be you, it might be more students, you know. But I think it's worth, and I'm happy and I'm glad that we found out that this is a problem for some of you. So all I want to address here is you have to have the correct broker, which is regulated, which has low spreads, and a correct data feed. So this is your baseline. If you don't have this one, that's a point you have to work on. It's your business. You want to get that corrected. You have to have a good and simple to use trading software or trading computer. Again, if you are very talented and you can work on your mobile phone, well, that's good for you. And I'm always happy to support you with anything you struggle. But I think most of us cannot. And if you are not as talented, you might have to have a computer where you can do, you know, all your back testings and so on, because on a mobile phone, back testing, I don't know if it's even possible. You have to have a good positioning sizing tool or risk management tool, because it takes away so much stress and it will provide you consistency automatically. If you have the right tool, you know, like the StarseedFX tool, it's a no-brainer for you. Then you just can concentrate on trading. You don't have to start calculating and do all of these things. It's done automatically for you. And it's not a big investment, but it's an investment in your business. You have to have the right tools to be good in your business. It's the same as if you have a workshop. You know, if you don't have the right tools, you still might be a good mechanic or whatever, but others might still be better and more performant and so on, because they have things which just take away a lot of work for them, which you might not have. It's in any business. You have to have your correct baseline, and you have to have your tools in order to make this business working. Of course, what you also have to have is a good and reliable internet access. So if you don't have one at the moment, you better get one. Well, in the end, if you don't trade EAs, it's not as critical, because you set a stop loss and a take profit, and then it's stored on the server. You are fine with this one. It's depending on your internet access anyways, but I think it's a good point to still have. And you want to have a business, or in our case, a trading plan, which clearly states what you want to do, what you want to achieve, and so on. And you want to have the time to learn and the time to trade. I know somehow this sounds now ridiculous, but you have to have this one. Otherwise, it doesn't make sense. If you have no time to learn and you have no time to trade, and you have to be honest to yourself, it will not work. As obvious as it sounds. But I just wanted to make this make you aware about this. And for the trading plan, we jump into the next session, trading plan, of course. And what you see here is not a trading plan, because if you don't have one at the moment, I just want to provide you some questions which you have to ask yourself in order to create a plan for yourself. Because some of you might struggle also with this one. And I provided a template in the group, in the community, which you can use anyways. But in order to make a trading plan for yourself, you should consider topics like time frame, risk management, your strategy, markets and sessions, your take profits, and you probably want to have a checklist which helps you every day before you start in your trading session to make you ready for your takeoff. And for the time frame, it's very important for you. You want to know which time frames you trade. What is your higher time frame and what is your entry time frame? Maybe you just trade one. I don't know. That's depending on your own trading plan. For the risk management, you want to know, for example, what is your initial risk per trade? What do I mean by that is you start with a kind of initial risk where you say I risk 0.5% for every trade I take. And then you have, let's say, I don't know, 2 losers in a row. And once you had 2 losers in a row, you want to reduce your risk. That's what your plan is. And you want to reduce it to 0.25 until you gained back your loss. And then you start again with your initial risk per trade. And also when you want to stop for the day, let's say if I have 2 losers, 4 losers, 5 losers, when I want to step away from the charts, in fact, provide yourself those rules, stick to them and improve them. And yeah, it's like the PDCA process. Like, you plan, you do, you check, you act. It doesn't mean that your first trading plan will be the best plan. Of course not. I update mine on a regular basis because I find things which I don't like or things which don't work. I update it, but I stick to it for a while and I update it again. And this is the same thing you should do. It's the same for the strategy. I mean, for me, the trading plan doesn't contain the strategy, because you should know what you trade and you should know what you're looking for. But maybe you look only for a single pattern where you want to enter, like jog, for example. Then you remind yourself that you only want to enter for this pattern on your trading plan, but just as a kind of short reminder. Markets and sessions. Yeah, which markets do you trade? Like, I don't know, Forex pairs, Euro USD only, or all the major pairs, or gold only, cryptos, whatever. Just backtest, find out what you prefer and write it down, but don't trade everything, It might also look ridiculous, and it would be very obvious to you if you have in a trading plan all the pairs that are existing out there. Also, which sessions do you trade, if you know what sessions are and if you're aware of them? What kind of trader are you actually? Are you a swing trader, an intraday trader, a scalper, whatever? That you don't have to put that on your trading plan. But if you trade a session only, stick to that. If you trade 2 sessions only, stick to that. Improve from there. And what's your take profits? Not only your take profits, but what is your daily profit target, weekly profit target? When do you break even? Is this a hard rule? When do you partial out and when do you take profit? Why do you have this trading list? Because whenever you lose a trade, you go through this trading list or your checklist, have a look, did you stick to all your rules? Yes or no? And in the beginning, you will find out you haven't stick to those rules, usually for your losing trades. And then you recognize, okay, the next time I don't take the trade because it was not according to my plan. I just traded it anyways. At least that's what I found out. And when I journaled my trades in the beginning, I just saw, okay, it looked good in the beginning. It was not according to my trading plan, but it still looked good. I traded it anyways, and it was a loser. And that's where the trading plan helps you. At one point in time, you can step away from the whole trading plan as well. because you have it in mind, it's obvious for you anyways. But if you have a losing streak, then go back, check if you actually traded according to your plan, to your business plan. And if not, you might have the reason why. So the next topic we have is the market sessions. Why I put this topic here on this session actually is because Kyle had his fantastic video. It was really amazing and a cool breakdown. But I also realized as I watched the sessions, well, not realized it's not the correct thing. I remembered when I saw those things the first time that I was actually completely confused about the sessions, especially because all of the different time frames people are living in. And there's so many different definitions of sessions. Of course, it's clear when the market opens and the market closes. There is no confusions about that. But then there's something like London Open, London Kill Zone. Then there is New York Open, New York Kill Zones, and then there is London, New York Overlap, and Asian Range, and whatever. All of those things, and they are not so obvious. And people, especially newbies, and we have a lot of newbies here, because unless order blocks alerts are so simplified that even newbies can afford to trade it. But now we have a lot of newbies who also want to go a little bit deeper and understand all these concepts. And that's why I also said maybe we should also have a look on these trading sessions. What are those trading sessions? And that you are aware that those sessions are not simple markups on the chart with boxes, which we do, but there's real people working 9 to 5 behind those zones, handing over session informations from London to New York, from New York to Asian, and so on, because they have profit targets they have to meet. And if you consider this, you look at those boxes in a different way, as if you just consider them being indicators for MT4 or for TradingView. And that's why I thought, let's have a look what those sessions actually are. And I tried to make a kind of matrix, for Sydney, Tokyo, London, New York. I just concentrate on those. When the market hours would be for Frankfurt, London, New York, and Sydney. And depending on where you're in, you would mark it up differently. And of course, also depending on your broker time frame, because this makes it a little bit more complicated. Because usually your time frame differs from the broker time frame. So you first calculate your own, then you calculate it back to the broker time frame that it fits, and then you have this winter time, summertime, and so on, which makes it a little bit confusing at the beginning. But once you have it set up, it's set up. And if you struggle with it because you don't know which market currently is opened, then I would propose just have a look at this time zone converter for Forex, and you can switch your own time zone, and then you can see which market at the moment is open and which one is closed, and when did it open and when did it close actually also, which helps you in the beginning to understand in which sessions you're currently in. I know that's not an indicator, but if you want to set up an indicator, you have to be aware of those things. And these things will be available also in the teaching, on the teaching pages, so that you can look them up later on as well. And then there's always the question, so what is the best time to trade? You can Google that and you will get a clear answer, because the best time to trade is London, New York. But is this really something which is the right answer? Well, I doubt it. Of course, in London, New York, for the European and US pairs, you might have the most volume, most volatility, but the best time to trade for you is the time you have backtested for yourself. That's something you have to understand. And even if you ask other people, when do you trade? Because this is usually the question I get, what do you do? And I, of course, can tell you what I do, but it doesn't mean that it fits to your trading plan, because probably you have to get up at the same time, you have to sit in front of the same pair I trade, that you have to consider all the other things I do. It's not helpful just to consider one thing out of the whole concept, doing the same way as I do it. That's I always struggle to directly say what I do, because I want to make you aware I do this, but that might not help you because you might have a complete different approach. Why is that? I will show you later on, because probably you could trade sessions only if you want to. You can trade 1 minute, 5 minutes only if you want to, but you would not probably combine those things automatically. And even, I don't know, does it make sense to trade a JPY pair during a US session or the European session? Not automatically, because depending on the pair you trade, you want to consider the session, of course. And very often I hear that Asian session is just ranging for Euro USD, but if you backtest, you will see there's a lot of huge moves in Asian session as well. So this is not something which is automatically happen, that in Asian session, the price will range. The chart shows something different. And that's just a fact again. If you backtest, you will see yourself. Because price does what price does, and price needs to reach certain zones, and it will do it also in the Asian session. It doesn't know that it should actually range. And of course, if you have trade JPY pairs, you might consider more the Asian session. If you trade odd pairs, you might consider more Australian sessions, but everything goes back to backtesting. And I think you understood the point from this point of view at the moment. And I brought this chart up because I found it was a good example. You have a 15 minutes time frame here, GBP USD, and what you can see, I'm pretty sure there's a lot of things you can see only from market structure point of view, SMC point of view, a lot of breaker structures, a lot of mitigations you can find here. But in fact, you can see here 2 to 3 days of trading. And let's go to the next slide. The question is, would you be able to spot this kind of liquidity grabs, which obviously are, of course, it's mitigations in addition, but I think we can all agree it's also liquidity grabs, and afterwards structure was broken and so on. Would you be able to anticipate that by only looking at the charts, not considering anything else? I don't think so. Of course, you can mark up your zones of interest, but if you would now add additional information to this chart, you would be able to trade completely different. And what I mean by that is, now let's put the sessions on this chart. And this is just the way I put the sessions on the chart. As I said, there's several ways. I don't have the lunchtime break marked up or the session overlap. Also, you can see the Frankfurt session is not marked. I only mark it that way, the Asian range, the London, and the New York session. And now if you have a look at this picture, the whole picture gets a complete different meaning and setup. More advanced traders will already recognize what I mean with this. And the newbies might still think, well, okay, now you have 3 boxes of different color on there. It doesn't say much to me. Now, let's have a look on the next slide. Again, we're talking about this liquidity grab as a first point, because what you can see, you have the Asian session, which is followed by the London Open, who takes out the Asian liquidity, the Asian high, only to drop price within the whole session. And what, let's stick with this for the moment. And this is day 1. You have Asian range, liquidity taken out, price dropping, day 1, because these 3 boxes show day 1. Then you can see day 2, Asian range, liquidity taken out by London Open, price is dropping. Day 2, exactly the same behavior. Those of you who know, who learned ICT, this is very familiar to you, I'm pretty sure. You could only trade this, to be honest. You just wait for this setup. It's not happening every day. Don't get confused by that. But if you backtest it with these boxes, you can see how often it actually happens within a month, for example. And I just wanted to make you aware, if you put additional considerations to your chart, you might look at the complete same picture completely different than you did before. What you also can recognize here is, again, you had your Asian range, the London Open, when London started, you know, it's the 9 to 5 job of those people, taking out Asian range, mitigating a zone of interest, but did not take out the highs here because it was enough for them to take out the Asian range, dropping the price during London, and at New York Open came back up to mitigate those London session supply zone. Well, the price could easily go up here as well. You just have to consider this might be the case. If the people behind those sessions provide you this move down, this is exactly what might happen again. They come back in the New York Open just to mitigate the imbalance they had here, the supply zone, to drop further. Again, if you back tested it that way, it make things more visible to you, because without those things, you would just see a chart. You would not be recognized. Where is London people working? Where is New York people working? What is Asian doing? And who took out what and who returned to when? Was this the mitigation here of London session? No, only by putting additional information consideration on the screen, you will be able to view the same chart in a different way. And if we continue now to day 2, you can see Asian taken out by London Open, price dropped, only for New York Open to mitigate again and to drop further. This was day 2. Usually, or very often, this happens for one day and the second day. Sometimes, of course, it can also look completely different. But I just want to make you aware, this is how you would look at sessions. Of course, first you have to know when the sessions are. It has to be in line with your broker time frame. And then you could decide to only trade a session, for example. One additional thing I want to make you aware of is, well, can you spot the session reversals? Because only if you look at it and if you backtest, you will see that in every session there's reversals. And that's why also the 15M jog trading is usually quite powerful, because you have a reversal in this session, Asian, you have a reversal in this session. Here you had a Frankfurt reversal, you had a London Open reversal, then you had a New York kind of open, it's lunchtime rather, reversal. Then you had a New York Open reversal. This is rather going to New York close and so on. Can you spot that there is 1 to 2 reversals in every session? And if you continue here like this, you can see if you only concentrate on the reversal happening in a session, you can actually, if you can master that, you can make money, but you would not be aware when these reversals might happen, like, you know, London Open, London Kill Zone, if you don't draw the sessions on there when the people are actually working. And that's actually everything I wanted to tell you for today when it comes to market sessions, or what did we call it? Yeah, market sessions. Because I don't want to over confuse you, of course, with the topics as well. Also, these charts or pictures you will find in the training section, because it makes sense to have a look at them again. And I hopefully we had some of you saying, well, okay, when I haven't recognized that so far, and I know the advanced traders would just say, oh, I'm bored. When do we get the more advanced stuff? And I have to further bore you, because there is not much advanced stuff today, because we are heading to the end of the session. And something I also wanted to talk about was, you know, chart reading and scalping. And we did it already today to have a short look how to read kind of the charts candle-wise. Now, if we have a look here, we have a 15 minutes chart. We see here there's a huge break of structure, a huge inefficiency, and then we have this mitigation, and then price trades away from it. And for us, it's not quite easy. Let's say when we talk about let's say scalping, because that's what we want to talk about it at the moment. When to jump in a trade and when to go out of a trade. Of course, we have fixed stop losses, fixed take profits. That makes the things easier for us, because it's you can, let's say, plan your trades a little bit better. But if you want to go into scalping, for example, there's a few things which could help you to read the charts differently. And for example, this would be a kind of three-step entry. First of all, which is very important, you have to have a valid reason why you enter a trade. You just cannot enter a trade because, for this example, an EMA was broken. This could happen everywhere and also in consolidation zones. So you want to have a valid reason why you enter a trade. And in this case, as I said before, we had a break of structure with a huge inefficient move. So we already knew price at some point might come back up to mitigate it, which it did here. And after it mitigated, so first step, you want to see a break of structure. Second step, this is standard SMC model. Second step is you want to see that the price was mitigated. And the third step is you want to see the two candle body close above, below the 13 EMA in this case. And if this happens, this would be the reason for us to enter this trade. And now what you would do is you have a stop loss, you have a take profit, but we don't in this case have a stop loss. Why? Our stop, because we are sitting at the chart as scalpers, we would sit here and directly watch what the price is doing candle by candle. And our stop would be if a candle body closes above the 13 EMA. So if a candle body comes back up, not wicking, comes back up and closes above, then we would stop our trade manually. And what would be our take profit? Exactly the same. If the price manages to come back up to 13 EMA, we take the profit if we are in profit. And that's what I want to steer your eyes kind of to when you trade, when you sit in front of the charts and you might have something like an EMA on the charts, because sometimes you get very nervous when you do such kind of trades, but actually you find out that there is no reason to close this trade just because you have a move like this. Let's say you entered the trade exactly at this position, and then you start to read and understand what price does. The price, first of all, comes back up. You might be nervous already, but you know if it closes above here, you directly close it with a small loss. But then it continues to go down, so we are happy, all good. The next one is an up candle. Well, you could get nervous, but the up candle did not even manage to go above the last candle. So no feelings here. The next candle went down again. Anyways, good for us. The next candle was an up candle again, but it did not manage to close above the last one. No feelings. This one went up, went down again, exactly what we want. This one as well. This one is an up candle, no hard feelings. It didn't manage to close above this one. This one did also not manage to close above this one. Until here, no hard feelings. This one is rather on the edge. If you have feelings here, I could actually understand it, but we all can read charts by now that we can say this here is a supply zone. If this price breaks the zone, of course, we don't want to be in this trade anymore. It would also be a chalk, as we learned. And then what price does next, it goes further down. Good for us, we haven't closed the trade until now. And so you continue candle by candle. You can see here, price didn't manage to close above, it went further down. And this here, you can see price managed to close above the first candle, which is usually the first indication, same as here, that price wants to return. But what do we have here? The same situation. We have a supply zone here, which price is respecting. If this supply zone is broken, also the EMA is broken. We want to be out of this if the close is above. For a jog, only the wick would be above, that's okay. But with the next candle, price moves further in our direction. And you would only actually, because you can see here it's closed, but it didn't manage to close above. And you would wait until you have your first body close above the EMA, and you would scalp the trade from here to here. And you just watch with no hard feelings, because you have a clear rule which you want to see that's applied. And you shouldn't have any bad feelings if the candle goes up, up, down, up, down, up, down, because you have clear expectation what you want to see. And only if this happens, you go out with no hard feelings. And of course, sometimes the start points are very hard to find, because sometimes you have, going up, going down, consolidation areas. But that's why when you probably have to say, I want to combine this strategy with sessions. When you have the most volatility, then you can have also scalpings. And this would also work, of course, for a 1 minute time frame if you want to. It's exactly the same situation. You have a boss, you have a mitigation, price closes below, 2 candle closes, goes down, and you would read the candles exactly the same way. As long as there's no candle able to body break above the 13 EMA, there's no reason, if you manage to jump in this one, which is obviously not the case daily, but if you manage to do this, you would have no hard feelings or say, I close it here because I have enough profits. You can do this, but that's not what you usually do as a scalper. You watch the price further and with the next candle. And why should you close it? Because it didn't provide you any reason to close it. Well, that's what I wanted to, what I also show my students when we go through the charts, just as a kind of further point, how to read market structure, how to read candle formings and so on. And I hope it was of some help for you as well. You might want to rewatch the video anyways. And of course, your questions, if you raise them in the chat, I will copy it and I put it again in the training section where it belongs to and answer it there. And I will also inform you when this is done. Apart from that, that was all the topics for this session. And well, I think that's it. I would not answer questions now because I have all of them. I hope you enjoyed it. It was not too boring for you guys, because I know there's a lot of advanced people here, but there's also a lot of newbies, and I'm the guy for the fundamentals. Kyle is the trading Superman, and you know where to head to if you want to advance in what direction. I'm happy that you still joined, although we had all of these confusions, and I'm actually out. And thank you everybody, and have a great day.